Good afternoon. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100 being recorded on Saturday, March the 30th, 2024. I am going to start with the NDX. I'm looking at the monthly maximum chart that I have. And I'm again going to go over the largest count that I have for the NASDAQ that I'm working with. A big difference between the NASDAQ and the S&P. Primarily, the NDX, or the NASDAQ Composite, started in 1971. So the most data that I have right now goes back to 1985. And the futures market in the NQ actually started in 1996. So the amount of data that we have, of course, is not comparable to the amount of data that we have for the S&P and in the Dow Jones, which basically go back to the start of the 20th century, basically. So starting here with the NDX, with the data that I have, now, I do know that I've looked at data prior that does go back to the 1970s. And so I believe that what we've done coming in to here is that we had a primary degree 5-wave advance up to the highs that we saw in March of 2000. And I'm labeling those as cycle wave 1. So in essence, it's like the NASDAQ is kind of like a new index to all of this, so to speak. So we don't have all of this historical data. And as much as we have, I'm labeling it as cycle wave 1. Now that decline from March of 2000 down to basically October of 2002, I'm labeling as cycle wave 2. It was a pretty steep, and actually, in my view, I was trading at the time. I was back here in the States. I had spent 10 years in Europe. I was back on the San Francisco Pacific Options Exchange, and it was quite amazing to watch what took place. That basically was the dot-com bust, as it was labeled. And the NASDAQ lost 87% of its value in that intervening time. And so it was a crash. Similarly, you could almost say to what it must have almost felt like, possibly, the crash of 29 in the Dow and in the S&P. Now, I'm not making a direct comparison, but in terms of a market, an index crashing, that, in my opinion, was a crash in the NASDAQ, in NASDAQ stocks. And from there, we started to build again as we moved in a cycle third wave. So what I have, again, here we have 2007, 2008 down to 2009. And that was the great financial collapse. And you're looking at that compared to that, you're like, whoa, wait a minute now, what's going on with all of that? Now, this, you can tell, was more of a crash. This, we saw a great financial collapse, but in terms of the damage that it did to the NASDAQ, still strong when we consider the recovery and then what did it give back? Nearly, I'm going to say at least 70% of what it gained off of those lows. So it was again, a steep decline. But in terms of overall structure, it also was an ABC, and it was a primary wave 2 versus a cycle. So that's also what I'm also demonstrating, is the power of the degree on which the market, was operating. And out of that, we rallied. We saw interest rates cut. The government came to the rescue of the corporations, and we started off in a low interest rate environment, which basically truly boosted the NASDAQ and put it into the stratosphere very, very quickly, as a lot of tech companies, new, existing, all showed up at the window to get 0% interest and as much as they possibly could to grow within the tech sectors. And it proved to be extremely successful, let's say. So the market rallies up in 5 waves of intermediate degree to put in primary wave 3, which took us to March. Actually, basically, let me go right down there. I think it was February of 2020, just prior to the realization or the arrival of the pandemic of the coronavirus. And so again, the market did a total about face, dropped quickly, but that's it. When we look on a monthly chart, there's that drop. We went from a high in February of 9,736 to a low in March at 6,772, I'll call it. This is all basis to cash. So quite a drop in 3 weeks, quite a huge drop in 3 weeks, primary degree. Then we rally back up, and again, so we get the continuation of a low interest rate, plus now lots of stimulus money come flowing in, and we race back up, and we reach the high in the NASDAQ. In the futures market, that high was 16,764, almost 65. And that would have been, again, November of 2021. So that is where I am putting in cycle wave 3. So I continue to look at what we're doing is a cycle 4th wave. Now, here it might be a little bit easier to possibly put the cycle wave 3 as an alternate in terms of that we're still within the final throes of a larger move up to finish cycle 3. And what that would suggest, and this is, again, I have trouble working this type of account. Even if I come down and I'm looking at my 10-year and I have to come into here and change this count, because what I'd have to do is this, instead of being primary wave 3, would have to come in as intermediate wave 3, intermediate wave 4, intermediate wave 5 to finish primary 3 up here. All of this would have to go into minor degree. All of this huge rally that we had would have to go into minor degree. All of this would be a minor degree all the way up to here. And is it possible? Well, yes. I can't say that it's not. I just don't, I would not count it that way because of a lot of what happened internally. And I wouldn't think that that was a minor, a minor 4th wave. And not a, well, here it's labeled primary, or even an intermediate 4th wave. And then putting an intermediate 5 up here and putting primary 3. So all of this would be minor wave 1, 2, 3, 4, and 5 for an intermediate 5th wave to a primary 3rd wave. So this would also be minor 3, minor 4, and this would be a minor 5th wave to finish. Yeah, boy, see, now I can't even do it because I just find it so harsh. To put this as intermediate 4, intermediate wave 3, these would all be minor waves coming up, all of them. So this entire move would be on a minor degree 3rd wave, and it just doesn't fit for me. So I still leave it as is. But if we are going to go on the basis, now one other alternate count that could be put into place would be that all of this is cycle wave 3, and then what we're getting to here would be cycle 4. So how would you start to measure that out just to see if it would be possible, right? If this is going to be cycle 4, we need to go all the way back. Okay, I'm going to tell you where we need to go. back out to that maximum monthly chart, and we now need to run just straight fibs from the 2002 low up to this high. I'm just going to stick it there, and then I'm going to have to come into here. And actually, not bad. I wanted to go right to that high. Yep. So not bad. Almost got it. I'm going to put it there. We're going to bring it back and stick it up there. All right. So what we're going to do is I'm going to put it back down, and now I'm going to bring it back up to at least the 10-year. So if we come back here, you're going to see that taking into the consideration, could that be a cycle fourth wave? It could. Because fourth wave, what's the most common fib? 0.382. And where was that? 10,664. So this is where I could make a slight change if I were to run an alternate count, and this is my alternate count. That what we have is an ABC down, and it is a cycle fourth wave. Putting this in primary, primary, primary. That's pretty quick, but it could fit. We dipped a little bit below that 382, and then we rallied strongly right on off of it. And in that case, what we're kind of staring at is this is my second point where I have a problem dealing with the internals, because this would have to be 1, 2, intermediate 1, intermediate wave 2, 1, 2, 3, and then we're in intermediate wave 3, possibly intermediate wave 4, and we're in intermediate fifth wave. So it kind of in both, and depending on how you'd want to count this, you're going to have to, this to me does not necessarily work out to be a 5. So this is problematic right there. This is 3, so it could be a 1 or a B or a 2. But then I start to run into problems. So even if I'm going to put in an intermediate 1, intermediate 2, and we actually, if I'm putting the cycle 4 here, we're doing a cycle fifth wave up to complete, now get this, to complete supercycle wave 1. Supercycle wave 1. That's what would be completing up here. And so now let's just say, for example, let's do this again. Let's do the math. If we're going to call this, first of all, I can't go back and get all the necessary data to run from cycle 1 up to cycle 4 to show us what this would be. So that's the first problem that I have. I can't get enough data because I can't get back to 71 to put this data together. So even if I had to take it from here, it's just going to be extremely inaccurate. Because this actually just goes back to 938 would be the low. All right, let's take it from there. Let's just say we're going to run it up, and I'm going to run it up to there, and then I'm going to run it all the way over to here. Because see, none of it actually works. So if I go down, and let's go back to that weekly, you can see there, none of it works. So none of that even remotely works out. So I'd have to figure a different way of putting in what we could expect for an upside move. So I leave it the way it is. And I know there's a couple of, even within the internals, they're calling for a larger move. But basically, if we're following here, I do have, if we have an intermediate wave C, and I hang on to the fact that it's a primary B wave, that first measurement for equality, A, C equals A, is at 19,549.74. The 3A2 for the irregular B wave within a primary B wave comes in at 19,180, 181. These are the cash market. So leaving it as is, my alternate just is really too difficult. So I leave it as is, and I'm going to let the market tell me, and if necessary, to go back and start making different types. Because the other choice would be that it's not the 3 is not here, it's not the 4, that I would have to accept that this is 3 and this is 4, and then we're working off of, again, I'm going to go back out, then we're working off of my primary wave 1. Now, let me check that one out to see what that looks like. So there we have, we're going to put in our fibs there to there, and then run that up to here, I believe. And see, even that, get it back down. And yep, we're pretty close. Well, we're up just a tad. Let me just lower this a little bit and see what I come up with. Activate and bring that back over to there. So you can see 2.618, right? So even if I'm in here and I take out all those and I start putting in these much further reaching 3618, 4236, even just putting in 5.618. And let's see what happens. Now we're up here, but we're up to right where we are. So even I went to 6.618 or 3.272 or 4.720 or all the different variations that people could put it that don't necessarily respond within Elliott. They may be Fibonacci sequences. So if you just want to run straight Fibonacci numbers, you're going to come up. But then the relationship between that and Elliott wave, to me, start to disappear. So again, I absolutely should have an alternate count, but my alternate count remains within the fact that we're still within a cycle degree fourth wave correction. And where exactly can this top come in? So we're going to find in there that there are some possibilities, rather than that even if I'm going to declare this as a cycle fourth wave, I can't get enough information to draw that first conclusion on a cycle degree basis where cycle 5 could end up. So, but this is 3A2. We already just did that. We put that in. So that part does fit. I'm going to take that off again. And leaving it there, if it's the fourth wave, I again cannot draw enough in to start to determine where all of this can end up, because obviously it's going to be above 22,000. And then how much, where does it place us now? And then balance that out against what so much other things are basically arguing for. You know, if we were really starting to cut now and inflation was appearingly under control, no longer threatening rate cuts, no longer disrupting, if we had a very smooth flow of the global economies without any geopolitical situations possibly majorly disrupting a lot of the flow. If things didn't appear to be as sketchy as they do, well, then it probably would be easier to work how the market can get up here. Now, let me add into all of this. We are starting to see some weakness develop within the NASDAQ, where a lot of these high flyers are starting to weaken. Now, does that mean it's going to be perpetual and it's really just going to provide for a larger decline? No, not necessarily. I will say not necessarily to that. But what it does, again, still even here in this index, does suggest is that we're entering a period of risk, and what that risk is to a downside move. Now, as to what degree we fall back to here, looking at where are we within this primary B wave. I still believe that we are still need additional upside before all is said and done. So if I'm counting now from here, primary A, we're in primary B, consists of A, B, C of intermediate degree, of which A and B are complete. We're in the C wave. Wave C would equal wave A at 19,549.74. 1.382 is the irregular B wave. Again, this is the cash market. That level is 19,181. I'm going to go up to 29 cents. 19,181. Now, within a triangle pattern, yep, it actually could and still be within the triangle. So let's take a look at that. So what I got going within the C wave on intermediate degree are 5 waves of minor degree, of which I have 1, 2, 3, and 4. We're in minor wave 5. I believe minor wave 5 within the NASDAQ, both the cash and the futures market, is tracing out a diagonal triangle up. So now I want to take a look at that, and I want to break this down just a little bit. So we're going to go in, we're going to go up to there, because prior to this, pretty straightforward, 1, 2, 3, 4, 5, ABC, 5 with the 3, it all works. It isn't as clean, it's not as pretty, but it fits. So I'm going to come down to that 4-hour chart where we're just actually looking from in here. And now we're going to go inside. We're going to take the deep dive. This again is the cash, and you can see we got gaps, we got little tiny, we got all kinds of markers everywhere. So we have ABC, but it's a 535 for wave 1, and ABC for wave 2, and A, B, C, A, B, C for wave A of 3. That's going to be actually my first point. Under this count, and then we have a B, and then a 1, 2, 3, very complex, but still very reliable. It still could be a 4th wave right into here. And as we labeled it on the futures market, WX, Y, X, Y, and then a Z, a Z. So there's a lot of, it really turns into a triple. ABC, X, ABC. Here it would just be a double. And then in the S&P, it was a triple. So, and still it fits. It's not breaking any rules. It's still fitting. There would be wave 1, top of wave 1 right there. Still got the room. We are within reasonable levels. But I want to just draw the attention. If we come back out and we're really looking at this thing, and I'm going to bring it back out at least to that, let's look at the daily. Even on the daily, if we think we're heading up to that high, there's the possibility of just taking a look at this cash market. Doesn't count as cleanly as on the in the future, but the cash could be telling the story. We have an ABC1, ABC2, ABC3. So that's an A, a B, and a C, and it works out to be an A here, but instead it's an ABC. We put a 3. ABC, we put a 4. A, B. A B wave can be as complex as that corrective 4. Again, not breaking any rules, all holding inside. Now, the difference being that when we come down here, we're looking at 1, 2, 3, ABC, X, ABC, I think, well, ABC, and then put the 4 here. 1, 2, 3, 4, and then we're looking for something to come back up and do a 5. Possibly, was that the 5 for wave 1, and this is a 2, and then we go gangbusters on Monday? Possibly. So again, if we're going to stretch this all out, 1, 2, 3, 4, looking for that 5, and then we're going to put the minute wave 3 up in here. Now, I think that we will rely on some other factors to before go back out, back out here, open this up to what can I look at to give me this. I'm going to put that 4, then we got 1 that we can do here. I'm going to put it there. And let's just say, what is that? That's the low. If we put it here, 618 is 18,732. And from here, it's just getting right up to that trend line. 100%, 19,080. Now we're getting up into where primary B could go. But is it going to do that to finish wave 3? Or is it going to do that to finish wave 5? Right? Again, I'm just going over some of the possibilities. If we have to put a 3 there and a 4 there, and this 1, 2, 3 comes in as a 4 of the 5th wave, right? Then we're looking here, possibly here, and then that could be all over. And if we're looking again, if we're going to call it 2, A, B, and then we're down to 1, 2, 3, 4, then we have here, and then possibly there. And that would have to happen pretty quickly because, again, the NASDAQ is not going to escape this period of risk that has developed around the S&P, particularly around the spiders, because the spiders reached an upside target at 524. That upside target gets pushed a little bit right now if we have still additional upside in the spiders as well. And I'm sorry, but I didn't mention this when I was doing the S&P. But if we're looking at this thing and we have the Qs have space up to about 450. And what did we get to on Friday? We got to 444. I know we're a little bit higher as well, like 445. They still have that possibility they can get up towards 450, maybe even a little bit above it. Is that going to be enough to supply this final push up towards 18,732 or even above, a quick trip above the trend line? But in this case, I actually, if it's going to be the finishing point for the minute 3 and we get a minute wave 4, which brings us back down to this level. So we get up to 732, we drop back down to 172, let's say. So we drop 600 points. Well, okay, so now even if we're looking, we're saying, okay, what if we had a 5%? That's a little bit more, but so it could even come in less. It could come in like, maybe a 3% drop. But the charts and everything else are basically kind of showing that maybe we should do it a little bit deeper. But again, if we're just going to do a 4th wave, well, it's about 3.5, bringing us back down to there, and then still do a run, and possibly again, remember in the S&P, both were coming in pretty much at that same level of where 4 ended. So it'll be about the same. Putting minute 3 here, we do a minute 4, we do a minute 5th, finishes here, all done. And that also, in my view, would need to kind of come in pretty quick. and not all around and not just go around because, oh, we got earnings, oh, we got this, oh, we got that. It's like, no, there really has got to be a catalyst that's just going to let this thing drop because we have cycles. We still, those same cycles that are in the S&P exist in the NASDAQ. We have a 3-month and then we have the 1-month. So we've got this mid-range thing that we've both indexes have kind of run up against. And it is to turn and allow that there is going to be a lot of downside pressure being put on the market. And within the NASDAQ, we are seeing that. The battle has been going around expirations. And I'll tell you, that's really, and around NVIDIA and around Apple. And where are we going to get this expiring? There's not anything really coming out that says, oh no, we better start loading up on Apple again. Or we better really start loading up on NVIDIA again, because everything that really has supported the stock at this level has been revealed. Now it's up to the stock to hold the price. And how much do we want to take out because of volatility? So how much volatility comes out, and where is the really intrinsic value of what can show during earnings? Besides that, so many firms, putting out like, well, we got up to 900 something, and so now we got to rerun our numbers, and now, okay, so yep, they're up to 1125. Well, I know that's like me running fibs in the NASDAQ saying, well, we can get to 22. My fib numbers tell me that. It's like, okay, but what's going to propel it to get up there? Continued fib numbers in all of these other stocks? Eventually one will catch up with it, and then we'll see it kind of just start to fall apart. And I'd rather that it was more organized. But as I have also been saying, that it's like you get to a point where it's like, okay, what's it going to take? What will the catalyst be that's going to tip this thing over and let it correct, not crash, not fall just down into the basement, just correct? We have some pretty strong overbought, levels, and we've had a continuation, at least within our RSI, where we have higher highs and lower highs in relative strength. This is just a basic, right? I could put add some things to the RSI and make it a little bit more developed in terms of like what's really going on. So there is a weakening within the NASDAQ. It is beginning to show some cracks. How much higher can we push Meta? How much higher do we need to push NVIDIA? What truly within it, and you can go and we can break down and look at cycles within this NASDAQ to see, yes, there are still stocks that are really displaying some very bullish signs. And that continues to hold it up. So collectively, what's going to come in when it all meets up, it's like, okay, we can correct now. So because we get some of it in some of the areas, like I can't remember which, there was a stock, now it just has eluded me, that was actually kind of showing up as very bearish against a lot of the other ones showing very bullish. Oh, Adobe. So I know we're just talking about the NASDAQ, but just stay with me for 1 second. As Adobe begins to show weakness, well, look what it's done. So this is what I'm talking about. This is a member of both the NDX, the composite, and the futures market. You start to see the cracks. Now, this is an ABC down, but this doesn't look complete. This is not presenting me with a bullish picture like we're going to turn around and go up. Excuse me. So it's looking more like 1, 2, 1, 2, right? Or 1, 2, 3, 4, 5. And then we're going to rally in 3. And then we're going to come down again. But even if we take it from there, which is the all-time high, 1, 2, so he just is like 100%, or are these slight new highs? There might be slight new highs. And then it starts to just work its way down. And look at this. This is one day. This, so obviously something came out in Adobe on the 14th of March. which took the stock in 1 4-hour period from 474 to 506 to 574 to 506. That's a very large drop, actually even lower. It got down to 485. And that was Thursday, a week ago, on March the 14th. And this is March the 15th coming in the next morning. And then we started to rally a little bit. I'm not sure. Whatever the news was, whatever happened. My point being, the stock took a dump. And it's a big high-flying stock that's dropped from 626 and touched below 500, all within a month and a half. So we are starting to see weaknesses. We are starting to see where the market is beginning to correct. So what's holding the market up? Well, you all know what's holding the market up. So again, let's go back. Let's review the Elliott wave. Got a couple of choices here. One, that the 3 did finish here, and this is the 4, and we're working our way in a 5-wave structure up to put in wave 5 and to put the end in. So where's our resistance? 18,732, 19,080, 19,180. And on a real blow off all the way up here. But I think that this actually may be holding it. Now the C wave at 100%, what's more important over that fib is the structure. If I can get 5 waves of minor degree and they come in clean and it comes in below there, well, then I'm going to say the C wave's done, and then unturned the primary B wave is done. And then we begin to correct. And as I said in the S&P, and if you didn't listen to the S&P, that's fine. We will be coming off. If we're finishing the primary B wave, what comes next is a primary C wave. Let's just walk through the Elliott. And a primary C wave, how is it going to begin, or what's going to be inside of it? Inside of primary C will be 5 waves of intermediate degree. What's inside intermediate wave 1? 5 waves of minor degree. What's inside minor wave 1? 5 waves of minute degree. Stair-stepping our way down. It will be, and wave 1 down, 2 up, 3 down, 4 up, 5 down, and we build to the next degree. And then we have 3 up, and then we end labeled ABC, and then we do it all over again as we work our way down. And we're looking for a C wave. Once it completes 5 waves of intermediate degree, we put the bottom in for the C wave. We've already run estimates on where we believe that likely is to come in. And we're really not getting too far away from reality when we're looking at this thing and we're saying that, well, from the way things look, coming in down below, like back towards on the cash market, we bottomed in October. In October, we bottomed at 10,440. Well, if we're looking at how this comes up, run the same thing. I go from there and I run it back up and I get a 0.618 coming, 1.618 coming down. I might be a little bit below that 10,440. But I'm not, the end of the world is not going to happen here. We're going to correct. And then what comes next is an additional rally. And then, yes, 28,000, we're going to get there. We will get there. That is the ultimate goal on a cycle degree. We finish cycle wave 4, we enter cycle wave 5, not going to be as strong as cycle wave 3, but going to be strong. Cycle wave 1 was pretty good. Cycle wave 5 promises to also be 5 waves of primary degree, count to 1, 2, 3, 4, 5 going up. And once you've got that 4th wave down, then you can start adding. Cycle 1 to cycle 4, and where's that going to take us? So again, we have much more upside. Artificial intelligence will undoubtedly be in play, but it will have expanded. So that's the other point that I want to make. Artificial intelligence is, in my full opinion and my honest feelings here, it is not a fly-by-night. It's here. It's here, and it's applicability, or how it's going to be applied in all of our various sectors. I mean, I've already listening to some that are talking about how and where it can be applied in medically, right? So we're just in patient portals is what I was hearing. A lot of work could be done, but also surgically, also reading MRIs, also setting up MRIs. So there's ways that artificial intelligence may come to improve healthcare and make the patient experience maybe, I don't know, easier. But then we also have where where it's going to be in energy and energy exploration, in mining exploration. The way artificial intelligence can take data or produce data that's being picked up through scanning under the ground. Where can it be just in manufacturing? Well, we've already seen it in the production, in automobile production, that it is robots, quote unquote. That's artificial intelligence putting it together. Where are we seeing now this is going to be the big thing to keep in mind. As artificial intelligence really takes over, what gets eliminated? Human beings. The human jobs will be gone. And so there's going to be a whole new reset that's going to have to go with it. Because one problem is going to create another. If artificial intelligence is going to make the operations of corporations, I don't know what the word would be, cleaner, more efficient, whatever, by taking out people, the human factor that needs breaks, that needs to do this, it needs all of the different things that we must include when we have human employees versus a bunch of computers and artificial intelligence, what can run 24/7. You just need a bunch of coders. You need a bunch of engineers who can get in there and when you get a glitch and something goes offline. So in any case, there's a lot of things going on, and I really do think that we need to correct first, deal with all our geopolitical stuff, deal with everything else that's kind of coming through that's going to have an effect on what we do and how we do it. And then we will see, in my opinion, we will see a correction down and then a new economic expansion. It's coming in a fifth wave, so it may not be strong as the third, right? Which is nothing but low interest rates and all the different developments that we have. But look what we had within this third. We had the great financial collapse. We had a pandemic. All this happened within it. We had it actually was not, when was this? This was a trade war with China. So look at it, when it was happening, it was like, oh, get out of the way. But look at when we have to compare it to what we've come from and where we're going to. So this correction is nothing more than I'm just going to tell you, it's nothing more than correcting the excess that, number one, began in 2009 and then was added to in all the stimulus that came after the pandemic. So a lot of stuff needs to get off of the books of the Fed. And Powell mentions it. But it's like, and I guess underhanded or just not really being very vocal about it, they are achieving some major goals. And therefore we will see that deficit start to come down. Hopefully, we'll see. Now let's go over and take a look at the NQ. So same deal, right? 1996 is when it began. My data goes back to 1999. So we go up to that high, and then we had the massive decline, 87% of the value, 89%, somewhere in there. And that was cycle 1 and cycle 2. Now we're in cycle 3. That's complete at the December, end of November highs at 16,767. I want to say 16. Come on, this one. There you go. 16,767. That's where I'm putting cycle wave 3. And then we have primary A, and we're still in that primary B wave. Now, everything else stays the same. Okay. Here, a little bit better RSI readings, but that's a monthly chart. I'm going to bring this right down. Let's take it straight down to the daily chart. Let's get inside this thing. There is the end of primary wave A. This is for the expiration, the contract rolls. So this is as of the June contract. We pull up our numbers. So now we have intermediate A, intermediate B within the primary B wave. And there we have intermediate wave C. C equals A at 19,762, 763, up in that area. Can the market get up there? Yeah, it can. Is that what I'm expecting? No, I'm not. But then I have within the C wave, I have minor 1, 2, 3, and 4. And now I want to bring it down one more time. I'm going to take it down to the 4-hour chart. And now let's go inside this. And let's see. Unlike the S&P, which I think is just doing a straight 5 to form minor wave 5, here we are inside the NASDAQ, and I do see it as a diagonal triangle, and complex as one can imagine. So the end of minor 4. 1. So we have A, B, C. It's a 3-wave zigzag. That's one of the rules. 1, 3, and 5 must be zigzags. And I'm telling you, 3 is not working out to be a zigzag. In a way, yes. In a way, no. Which again lends to the possibility that this completed wave 3. And this was ABC A, B, 1, 2, 3, 4, 5, C. Still not a zigzag. Zigzag A, zigzag C. Possibly, not really. So this whole interior is starting to just really be bothersome to me. What is the NASDAQ doing? So we come up with what we can do with the best. We have 1 and 2. A, B, C, B sticks with inside the boundaries or the triangle trend lines. So we have 1, 2, ABC A, ABC B, minuet, 1, 2, 3, W, X, Y, X, Z, Z, and then we have 4. Then the market should start to rally, but see, we started to falter at the end of the day. And now we've got the PCE data that did come out on Friday. Men's amends, it's kind of in between. And they could slam it because it looks like it could be a real squeeze if they think they're going to start getting a cut in June. So we got to see how they really want to look at this, how they really, what they want to do. And so again, a couple of choices, but let's just leave it the way it is, which is we're still inside this third. We got a 1, 2, 3. If that's a 4, we need to run up. We need to get ourselves above 18,709 to put in a new high and to complete 3. To complete, first of all, to complete sub-minuet 5, minuet wave C, minute wave 3. We got a lot kind of going on to get up into here. What's my alternate? And it's all in this finishing act here, is that it could be ABC 3, ABC 4, 1, 2, 3, 4, 5, 5. That's my alternate. Let me do it again. ABC 3, ABC 4, 1, 2, 3, 4, 5. Done. Now that projects still 18,984. Still coming in under that 382, 1.382, which is 19,168, we'll call it. On a push, if we start to see that things are beginning to decay, beginning to unravel within the NASDAQ, it's going to become more selective to really get it up there. What if Supermicro starts to kind of do its correction and loses a lot of the volatility, right? That was the thing. Once it became a part and is now included within the S&P, the volatility starts to come out. And when the volatility comes out, the premium goes down, you don't really feel like trading it, and the market will kind of come in. NVIDIA, same deal. Is volatility going to start to come out? Is the market going to start to relax? Are they really going to continue to think they got to just keep pushing it above 900 because somebody somewhere said, oh, we got a price target of 1125? Okay, well, if it goes to 1125, the volatility comes back and off we go to the races. But we have Adobe, we have Broadcom, we have a lot of individual stocks. Booking.com. That started to really kind of come off last earnings cycle. What if that picks up and that continues? That's going to have a drawdown. But we have the Mag 7. Apple, I think because of expiration, tried and fought as hard as it can to get itself above, back towards 173. They didn't succeed. So all of that goes off worthless. Now the stock, what do you want to do now? You want to go try for 173 again? No, possibly. Who knows? They might. But what are you going to do? Apple's got some serious stuff it needs to deal with. It's being sued. They got some headaches that they may have to take responsibility for. How's that going to affect the bottom line? Well, we don't know yet. So how much do we want to play in that stock, and where do we want to take it? So what is that? Is that really going to go back to 160 now? Or are we still going to live in this world where it's like, oh, Apple 180, 200? I don't think right now, but I think it's of course always a possibility, and I still believe Apple is a fine, strong, and their products are good. So again, but that doesn't mean the stock doesn't correct. So, and again, as I'm going to tell you one more time, I am not looking for a crash. Even when we're falling in a primary C wave, I am not looking for a crash. I am looking for a fairly organized decline in 5 waves of intermediate degree. And I just ran it down what I'd be looking for. Yep, there will be days where like, whoa, get out of the pool because we're dropping. So if you're more of a day trader, even if you're more of a swing trader, there's going to be some beautiful moves in both directions, I dare say. Don't forget, we will still have, they're going to come out, earnings, we're great, we're beautiful, we're this, we're that, boom, we run it up. Okay, but now we're going back down because of something else that's happening. All kinds of things. We can't run on the status quo anymore. And the status quo is, well, you're in it for the long term. So, whatever comes down, they always just buy it and it goes back up. Eventually, folks, that thought's going to have to change. So, and again, I am not looking for a crash. I am not looking for this thing to go and fall through the floor. Basis the futures market, by the way, I am actually thinking that we get maybe a little bit below here toward maybe a little bit closer to 10,000, depending on how far above 16,000, 16,768 we get. If we get up towards 19,000, that's 22,500. I mean, I could go and I could run fibs so we can see what this should look like. In fact, I will. Let's just run it. Let's just take a peek. Here is wave 2, and now we're just going to run it. Add our fibs right to there and to there. All right, 382. Well, gee, it is actually right there in the area. But what we might get, right, what kind of comes out of all of this, one more thing that I'm going to do. I am going to run fib extensions now. And we'll go back to use these, and we're going to bring it down to that low. And then we're going to run it up to where were we expecting? Right now, let's take it up. Let's just call it here at this level. That didn't work. That didn't work. Let's try that again. And we go from here down to here. There you go. Now we got it. We're just going to run it up to there, just as a thought. 1.618, we're at 9,209, right? Because remember, we get the irregular going, and if it reaches up 1.382, which is just above all this, I mean, where I've marked it as just above that 0.382, then we're looking, a 1.618 is the most common in terms of how it retraces back. And that brings us down to 9,209. Well, that's about 2,500, even less, right? My first thing what brought us, back to 382 is 10,066 for wave 4. Now we've already been as low as 10,484. So, but that was just wave A. Then we get a wave B and a wave C. Maybe, but at least I would think we do a flat or close to a flat when we get back towards that low of October of 2022, if not a little bit lower. Now, a lot of you are like, oh, it's a crash. Well, maybe it is to you, but it isn't to me. It's going to feel like it. There's going to be a lot of trading opportunity in both directions. Let me say that. But what follows, again, is another economic expansion, another majorly high, large wave 5 up. And it should carry us right through 25, 26, just right on out. Maybe all the way to 1929. Who knows? Maybe we're gonna resemble the Roaring 20s of the 20th century. Now we'll have the Roaring 20s of the 21st century. Who knows? Who knows? I'm just going to take it as much, day by day as I can here. So anyway, that's the big picture. Now all the way down to the small picture. I get too many lines. Let me get rid of some of these lines. I can leave that one up there. So anyway, what I'm going to bring it down now, let's bring it down to the 1-hour chart. I'm just looking inside here. I really do think if I'm going to mark this as a 4, whether it is a minute 4 or whether it is a sub minuet wave 4, we really should hold. But you can see 1, 2, 3, ugly. We got up there. We can call it a 5. And this is a 2. We should rally. We should rally. We should see tomorrow afternoon/evening, they come in Globex and they rally. If they start to break down below 18,378, then I am going to likely be more inclined to move this 3 as being complete and bring it over here. And ABC, put the 4 here, and 1, 2, 3, and this is just a larger 4. The minute 4. So, and then we can't go below minute wave 1. So we'll see, because this could be wave A of 5, and this is wave B of 5, and then we do the C of 5. Because remember, it's a triangle, right? Keep that in mind. A of 5, a B of 5, a C of 5. Now I'm down to the 1-hour chart. Again, I need more time. I don't need more time. The market's going to get more time because it's going to make it very clear to us. And I think that's the cusp we're at. Cycle-wise, we're showing a period of risk, and that risk is to the downside. Not a major, maybe 3 to 5 to 7% decline. But I don't see it coming in a sub-minuet level. I see it coming in a minute level. So that's why I switch it all around. And we've got the minute wave 4 in possibly. And so we're still in minute wave 5, but we're in a corrective interior. So not even that deep, to be honest with you, not even that deep, not from these levels. So we shall see. We shall see. I'm going to stop right there. And I hope I wasn't too all over the board on this. But the wave patterns continue to suggest, and let me just say that the NASDAQ is the only one that's really beginning to show that internal index weakness here and there. Now that could be overcome just by, Mag 7, again, picking up the pace and just doing it and finishing this. But even if it does it on a minute 3 and it comes up, I'm still looking for a 4th wave down. I'm still looking for those cycles which show that we probably get that pull to go lower through the end of April. So we're in that period. It's from the end of March, which is tomorrow, to the end of April. for downside. All right. The next update will be the Elliott wave update, and it'll be on Monday, April the 1st.